All right, so we got Jeff Booth back on the podcast here, back on the YouTube show. For those that you didn't watch the first interview, you can definitely go back and check that out. But I kind of stumbled upon Jeff again. Just a kind of quick preface here. Stumbled upon Jeff when I read his book, The Price of Tomorrow. Highly encourage you to go check that out. Really, really good, digestible read. It's easy. I think the thing that makes it so popular and so that it's taken off is that it's so easy to digest. It takes a complicated topic and delivers it in sort of a digestible, easy to understand format. So people that might not have a background in economics or in finance, it's very easy to understand. But Jeff, I guess for people that haven't read the book, if you can give them maybe a couple minute rundown of sort of your overall macro thesis, just give them a quick synopsis of the book.
Sure. The simplest way, technology creates exponential efficiency. That efficiency is deflationary. And so everything should be getting cheaper in our world, yet it's getting more expensive. Why is it getting more expensive? Because we've lived in an inflationary monetary policy, a world that has to push prices up. And so a function of the system we live in is essentially printing money and creating more and more money to make prices go up. And these two giant forces are colliding together today at an ever faster pace because technology is wanting to make things cheaper, faster and faster and faster. And in response, government has to print money faster and faster and faster to offset it. And all of the other things, all of the economic calculation from that fight, all of the division, wealth inequality, everything else, just about all of the other things we talk about in life are a function of that fight. And technology is going to win it.
Yeah. So that's, I tend to agree. I think that's, it's interesting because over the past 10 years, I think the Fed came out and said that over the past 10 years, they've actually underachieved. They've basically failed to hit their quote unquote 2% inflation target. And of course, now we're running, they're saying, okay, well, we're not going to hit 2% inflation until at least 2023. And we're going to run it into overdrive. We're going to do inflation targeting or inflation averaging. So we're going to let it run hot in order to quote, catch up. But I think if you talk to the average person, they'll probably tell you that inflation has arguably been much higher than 2% over the last 5-10 years.
But you can see that so again, one of to confirm that thesis, when I was looking into the numbers, when I wanted to see what happened, and so if what I'm saying is true, and I think if everybody looks around, if they look at their phone, if they look at things in electronics and technology that are getting cheaper and cheaper or free, they'd go, that makes sense. Prices should be coming down. No executive puts technology in their business to make prices go up. They do it to give you more. So the point is, if everybody's using this, shouldn't prices be going down everywhere? And then if you look at the CPI measures, and then you see housing going straight up, you see medical costs going straight up, you see education going straight up, you see electronics and other stuff coming down. And so, but nobody has asked the question, what did it take for those other prices to go up? And over the last 20 years, we've added $185 trillion of stimulus to make those other prices go up. So logically, you just go, could that continue? And by the way, not just continue at that rate, to match the offset of technology moving the other way, it has to move the other way. So that 185 trillion needs to be a lot more than that over the next 20 years to offset the deflationary force. And that printing of money will race into stores of value. It'll misallocate capital all over the place. So no one asked this question, but they think housing always goes up, without asking the question, would housing always go up without $185 trillion of stimulus over the last 20 years? If you believe that there will be another $185 trillion of stimulus over the next 10 years, housing will still go up. And there might be, and housing will still go up. But then ask the next question and say, what does that do to society, and what does that do to government tax rates and everything else, and what are they going to attack if housing keeps going up? And there's a whole bunch of people left out of that housing divide because they can't afford it, all caused by something they created in the first place.
Right. So let's touch on that, because I think that I do want to get an update on your current views. Obviously, there's a lot happening in the market right now, but I'm day to day, obviously, as a realtor here in the Vancouver housing market. So I'm certainly seeing what's happening in our housing market, despite really weak, economic numbers, soft labor market, virtually no immigration over the past year, and we've got prices up, 25% for single family houses, townhouses up 20%, condos starting to go up, everything is going up. I've got journalists calling me off the record and saying, hey, I'm not really working on a story, but I have some questions for you. I'm trying to understand, why is housing going up? There's not really any fundamentals. I just can't, because, back in 2016, they were just talking about population growth and foreign money, and it was a little bit easier to put some anecdotes together. But today, I think they're having a really difficult decision comprehending it. And so I kind of want to get your updated thoughts on how you see things today. The Bank of Canada was out this past week again saying, we're a little bit worried about housing. It has the potential to, people are having extrapolative behaviors right now on prices, but we're still going to keep interest rates on the floor until 2023. So what's your view? Do you still see in the near term deflation playing out over inflation? I mean, obviously, we're seeing yields start to back up. There's inflation expectations rising in the markets. Commodities are shooting through the roof. Do you think that central banks are winning the game right now, or what's your current view?
So from the book, I talked about what central banks would do to stop it, and what needs to be done to be able to transition to a digitally led world. So there is no way for us to keep on the existing system without concentrating all power in government and removing free market, because technology demands a currency that allows for deflation. And think about that, right? It makes sense. So if technology is doing this, then if you're printing against it, you are stopping nature. And if your technology is reducing prices, and reducing prices in a free market means the abundance is broadly shared with society, then anything that's done to stop that technology abundance is concentrating power, first in kinds of hands of big corporates, and then in hands of governments, because essentially they're choosing the entire market. We have seen the experiment from Russia, communist countries, that centrally planned economies never function as well as free market economies, because there's no way to make choices at scale at a centrally planned economy. So if you keep doing that, it looks like control by the biggest thug. Now, that's where we are on. So all economies, there is no free market anymore. And there really isn't, because we pretend that there's a free market. Well, in Canada and elsewhere, you're printing money at a crazy rate. If you stopped printing money, and this, maybe some of your listeners don't, why you can't allow deflation, why the existing structures and governments can't allow deflation, is because there's nothing backing it. There is no money. It's just debt, a massive amount of debt with counterparty risk all across and all the way down to the sand. So if you allowed deflation to happen, if you allowed nature to happen, it keeps unwinding. Every bank fails, every institution fails, governments fail, and it just keeps unwinding. So that's what they're scared to death of, and that's what they're printing against. And so in that game board, you can expect more printing. You can expect a lot more printing, exponentially more printing as we get out. But it doesn't solve the problem. It makes the problem worse.
Right. So my take of it is, basically, to summarize kind of what you said, is that essentially we have a credit-based monetary system that relies on increasing more and more credit or debt. Debt must continue to compound in order to basically derive any sort of economic growth. And by that, I'm curious to hear your thoughts, ultimately, is that there's not going to be a change. There's not going to be a willing change from policymakers to suddenly change and reset this system into something that is probably more efficient. It's going to be, we're just going to continue to print, and we're going to try to keep this thing on life support for as long as possible.
So it's short-term outcomes versus long-term outcomes. It's the marshmallow test at scale, right?
Yeah.
And seriously, that's what, and politicians are elected and everything else. But imagine you're in the system right now. You could wave a magic wand. You could do whatever you want right now. What would you do? Because that's how big the problem is. Today, if you allow, so it's way too late to allow technology-led deflation or disinflation is the best thing for humanity, because in a free market, it keeps on forcing, it saves our time. We move and we get things cheaper and cheaper and cheaper. We don't pay for our photos anymore. And Kodak was once a big business charging for photos, and we only used a tiny amount of photos. Now we have billions of trillions of photos, and we use them everywhere, and we don't pay for them. So technology gives us that everywhere. It will give us that everywhere. In every industry, it just moves down against a backdrop of a system that requires inflation. But how do you unwind it? How do you, and so how do you, if you say you're king of the world, and you say, okay, now we're gonna change systems, everything fails. You can't just make an unwind, because the entire thing fails. And depression of the 30s would look like cakewalk in that economic calculation, because there is nothing there. There's no gold backing it. It's just credit. How much credit? There's over $130 trillion today of negatively yielding negative real interest rate bonds. So, say that again, right? 130 trillion. If you had to pay back $1 trillion at $1 a second, it would take 32,700 years to pay back that $1 trillion. Yet there's $130 trillion of negatively yielding real rate bonds. So some are yielding 4%, but they're chunk bonds. The real yield is less than so negative yield. So what that's saying is, on the best day, I'm going to put my money in what is deemed to be a safe asset on the best day, and I'm going to lose money. For sure. I guarantee you I'm going to lose money. Every other asset price is calculated on that risk-free rate. Real estate's calculated on that risk-free rate. Every other asset. So if you manipulate money to that degree, to that extent, every other economic calculation that we live in, food prices, real estate prices, everything else, is manipulated by the same extent. And so people are looking to, where is their safety in this market? And they're trying to find ways to find something that's safer than that rate, which is negative.
Right. So basically, every asset essentially goes up. You create more and more wealth inequality, larger wealth gaps, et cetera. And I think we can particularly see that in Canadian housing, is that there's no fundamentals. It's just going up because these guys are pumping credit. I actually find it very interesting to see is we've got residential mortgage credit growth running at decade highs. So you've got credit growth running at 10-year highs in the midst of a recession, pandemic, whatever you want to call it. And basically, as I've kind of told the listeners here, is essentially what you have is a situation where policymakers have tapped the banks on the shoulder and says, listen, you guys are going to turn on the spigots. You're going to start just printing mortgages. And this is how we're going to get through this recession.
They have to default on their current currency in nominal terms, right? So that they have to make the currencies, they have to worthless. But every government in the world is doing the same thing. So it's a race to the bottom on currencies.
Yeah.
And so why Canadian dollar is actually holding up pretty well, even considering the how much they've printed, is because US is printing more,
right?
And we're backed by commodities.
But that's the thing. So now what's interesting is it all depends, in my view, is what's your unit of account?
Well, that's the point. All of this is, and it's really confusing for people that live in a system. So we measure a system by the system we're in, right?
Yeah.
A goldfish doesn't measure the world; they measure the bowl that they're in, and they see they don't know about the rest of the world. That would be a really good example for what people do with currencies. Then they're measuring all prices by the currency they're paid. It's actually why people don't really see the actually, you want not a crazy irony. Governments trying to create inflation to give more people, say, MMT or create an inflation to give more basic living, or we're going to do these services. Nobody realizes that calculation, inflation on one side, is wage deflation. It's the same thing.
Right. Yeah.
Right. So in other words, trying to create inflation is the exact same thing as making your currency worth less. So your savings are worthless, um, and your wage rates are going down, or your labor rates are going down. So how do you square that? Right? How do you square that?
Well,
Because you're the people the people that are saying we're doing this to save a whole bunch of people are actually hurting a whole bunch of people in the process. They're driving the inequality at scale.
totally. And that's, like you said, here's your 2% wage inflation. Here's your raise. We're giving you 2% because that's what CPI is telling us. Meanwhile, that house you want to buy is up 15%.
Totally.
Have a good day.
Yeah.
Yeah.
And for anybody that actually believes that commercial real estate should be higher right now in the height of COVID, compared to what it was before, like, give that a thought. Like, does that pass any rational test?
Yeah.
And so why is that? And you can see what's happening. Can it go a lot higher? Yes, it can go a lot higher, but it can, in real terms, what's really happening is the currency is being destroyed.
I totally agree. I think that, so how does this now, I kind of want to transition. I think we've framed it up extremely well here for the viewers. How does this ultimately lead you to Bitcoin? Because I know that you're a huge proponent of Bitcoin. You've been vocal. You've built a really nice following around that, and you're becoming one of the go-to guys. And so, obviously, as a local Canadian here, I wanted to get your thoughts on that and sort of educate the viewers on your view, because I know it's a very contentious topic. I think some people love it, and some people think it's going to zero. So,
Yeah, and I want to get so let's go back to the $130 trillion and all economic calculations. So actually, you know what? Before I do that, I'm going to say this. When I wrote the book, that I'm trying to look fact-based arguments and say, how do you move forward? What an entrepreneur does is, once they see an asymmetry in the market, or a mistake or something like that, all energy goes into fixing the mistake and moving forward. So agree on facts, put all energy into what do we need to do to transition and make this right. And so what I see today is a whole bunch of people realize the existing system is just a complete Ponzi scheme.
mhm.
Yet nobody's talking about how to fix it. They keep on going back to this system, and we know the system is going to fail spectacularly. That failure could be revolution, war, that could be tail risk, because the taxes that are coming on real estate, because it's driving wealth inequality, the taxes that are coming on real estate is going to be so staggering.
Yeah.
But it's going to create more tension in markets and everything else. And it's all function, and all of this tension downstream, the us versus them everywhere, is caused by this. And it's starting to move into a geopolitical risk, China, US, everything. And because what do you do when you need your population to believe in you and your currency? You create a bigger problem. It's their fault, right? And so but you look through history, that's how these when currencies fail,
Mhm.
societies go through it's a really hard time, as kind of a new king of
This loss of
currency.
confidence in the existence.
Exactly.
Yeah.
And people believe other people, which will tell them it's not your fault, it's their fault. And that happens typically first inside a country, inside a nation state, and then when it happens between borders as well, all without realizing what caused the whole thing in the first place. And that's where we are in this cycle. I wish we weren't. I really wish we weren't. So I wrote the book in order to have a lightning rod conversation, to be able to bring this to people's attention, that all of this other stuff they're talking about is total bullshit. If we don't solve this, if we don't solve a way for currency to have allow for deflation, the world's going to burn, right? It's going to be really messy. And I thought, for my kids, everything else, that's a really bad place to be. And so that's why I wrote the book. And I've been searching for, and I've followed Bitcoin. I've been in, because I'm in technology, I followed Bitcoin for a long time, and I've been interested in it a lot. But I was also open to what other ways could we make this transition? And what I've come to through not just the book, before the book, but certainly after the book, is COVID accelerated everything that I was saying in the book on both sides. Accelerated technology adoption and accelerated the printing in a response to it. And as the system itself won't change itself from within. So Bitcoin becomes a forcing function to be able to change the system. And if it happens slow enough, then you can transition from one system to the other system with the least amount of damage to society. Not no damage. This is going to be ugly no matter what, but least amount of damage to society. And so that's what I love about Bitcoin. People are going to make a fortune on the way through. I would encourage people to at least have some allocation as a lifeboat, because and people should also do their own research. So don't trust what I'm saying unilaterally. Do your own research, find out why, but have an open mind on why this is important. Now, if we go back to what I was saying before, the $130 trillion in negative bond yield. So what if the thing that people believe is risk-free is not risk-free? What if it has all the risk? And more people start to realize that the thing that they think has risk, Bitcoin, has no risk. What happens to the $130 trillion? 130 trillion in credit? It starts leaving the system, and it starts moving over to Bitcoin. And what you can see right now is that's what's happening.
Mm-hmm.
Hedge funds, bigger Mass Mutual companies, first a bunch of crazies, cryptographers and everything else, and I include myself in crazies, that this could change the entire system, and it has a chance, maybe a 1 in a million chance, maybe 1 in a billion chance, but it has a chance. More and more people. And what people are starting to realize is the thing I think is risk-free is not risk-free at all. It holds the most risk. And over here, the thing I thought had risk holds very little risk. It becomes an asymmetric bet. I'm not going to say no risk, but I'm going to say the probabilities of it going away are very low. And as that happens and more people move over to it, and technology and the type of people that are working on it, how many smart minds that are working on this ecosystem, it happens faster and faster and faster. Now you'd have to ask, what happens to the existing system as money leaves that system to Bitcoin? And you would expect interest rates to spike.
Right.
But if interest rates spike, the entire economy worldwide goes into the deflationary depression that I talked about.
Yeah.
So that means that to hold interest rates down, The governments have to turn up the printing press on record speed to be able to keep them down, and as money leaves the system.
Right.
So those things are what I'm talking about are still all in front of us. But if you just think about, you said it before, we tend to measure our world in our currency. But if you measured your world in Bitcoin, you can already see the deflation I'm talking about. Every year, everything will come down in relation to Bitcoin.
Yeah. That's how I'm framing sort of my worldview. And it doesn't necessarily have to be Bitcoin, but just any asset in general, you can just sort of see that it's almost pretty much outpacing what else is happening. But yeah, I mean, you mentioned just the adoption. I think, we've seen it obviously, like MicroStrategy was kind of the front runner. I think BlackRock's come out recently. Tesla. I mean, there's so many. I think, one of the ones that I'm finding interesting, like following the space a little bit here, is there's a couple Canadian ETFs that have launched now. They're actually the first in North America to get approval from the regulators there. And how big do you think that's going to be? And would you say, like, for people that are maybe, I don't know, maybe a little more risk averse, that don't want to hold Bitcoin in their cold wallets or whatever on their, like, would you recommend the ETF, or what?
So the ETF will bring a whole bunch more people into it and make it a standardized asset class. I personally, or I think people should explore. This is that important a thing that people should do research and understand why you might want to self-custody and you might want to do you hold it yourself. The whole point on there's a whole bunch in it, but one of the points of Bitcoin that make it to me so valuable is governments. We look back through history, and gold used to hold governments in control, like in they couldn't print beyond their stores of value. But what would always happen in gold was, because it had to be centrally located, centrally stored, it was confiscated, and then the rules changed, so people could wipe out, or governments could wipe out and go back to printing currency. So Bitcoin, by decentralizing it and having people hold it, they're on their own, prevents against confiscation.
Right.
And so that's a really big deal. And if you buy into the premise of where it takes us to individual sovereignty and a system on top of that can't be manipulated. So again, from your listeners that might not be deep enough on this, I would explore this deep, but with an open mind, with a curiosity, because realize a whole bunch of the stuff that you've been told, going through school and everything else might not be true, right? And I grew up thinking inflation's a good thing, and it's hard to unwire your brain when you think something's true and you build all of your other premises on top of that foundation. And why I'm not aware of any physics law that requires inflation for us to survive. And it's a parlor trick to be able to give governments more control. It's in fact, it's a hidden tax. In the US, tax rates were about over 90% in the 60s. The US couldn't pay for Vietnam War, everything else. Why do you think they went off the gold reserve?
Mm-hmm.
Because they couldn't take taxes higher, right? So they had to push off the pain and move off the gold reserve to drive inflation, which is a hidden tax and then tax rates come down because you're actually picking the pockets of the most vulnerable.
I mean, just thinking about it, the only reason why I bring this up is just because we're recording this the day that, I'm reading this article. I think that maybe a little bit off topic somewhat, but the Canadian government comes out and they're talking about how they've successfully ramped up immigration here in the first quarter. And they're basically fast tracking all these people in. We've got to get more people in. And I think that comes back to sort of the deflationary forces. They need more bodies coming in, more tax revenues. It's a system that depends on more growth. But you think about it, you're like, wow, that's really interesting. They're so determined to hit this $400,000 people immigration target by the end of the year. And in the midst that, if you look around, ask any Canadian, we have a serious housing crisis right now. We got house prices shooting through the roof. There's not enough supply currently, and you're funneling in more bodies, and you have a weak labor market, and that's
lumber prices are going through the roof. Everything's going through the roof because you're doing this.
Right, exactly. So it's good, but then again, everybody, it's kind of like you said, you kind of have to unlearn traditional thought, because traditionally you were kind of taught, well, like, immigration's good, and I don't have a problem with immigration, but you like the timing of it is like, wow, okay, it seems kind of interesting that they're so determined to hit it this year, and why. And I think it comes down to this larger system we've been talking about, which is, you need more, you need inflation, you need perpetual growth, you need more bodies, you need, that credit to continue to expand. And otherwise you start to get deflation, and that kind of compounds from there of falling asset prices, debt burdens.
So just let's stop there. What you just said, which is all true. Forget the debt. Let's just say I dropped down from space. I don't know the system that exists. Tell me why deflation is bad. Why are goods and services going down in price with the natural curve of natural pace of technology? Why is that a bad thing?
It
frees your time. The reason we use technology is to free our time, and so it's only bad because we so grossly manipulated a system that requires inflation so grossly that we're trying to protect the existing system.
Right.
It's so ludicrous to talk. So I would like anybody, if somebody's on this podcast listening, tell me why, short of we've created a Frankenstein monster of a financial system that is totally is instability. Why is deflation bad? Because in our personal lives, we look for more abundance.
I think that's for sure. I think that's the big thing with like real estate. I mean, why do people load up on real estate? It's because they view the system as like they're going to have to try to create more and more inflation, and that's going to essentially erode the value. So if I take on $1 million mortgage, the view is that the government is going to slowly devalue the currency, and that $1 million is going to look like pennies in 30 years.
Yeah.
And so that's why you take it on.
And I keep the asset. Right. But at some point, if you want the real Ponzi scheme is the system that you constantly have to manipulate. More people in the bottom, more currency units in the bottom to keep the whole thing going.
Do you have a personal view of how you see that system coming to a head or an end, I suppose? Like, what's your end game?
So that's really because there's just so many just different plausible, but let's talk about a couple of them. So and how they could affect different asset prices. We know if the existing system keeps doing this, that'll be reset through revolutions and wars. Because when you constantly enrich a very few and just keep playing that forward, because that's a structure that has to happen no matter what. That's the structure that has to happen. When you do that, you elect different leaders and everything else. And essentially the populace then comes back with pitchforks and takes it back. And you have these resets. That the existing system, if left unchecked, that's where we're headed no matter what. I wish that wasn't true.
Yeah.
Now let's say, okay, so now I'm the Fed, or it would be mostly Fed, Euro, and everything else. Canada is a small player in the whole thing, to China. But now let's say the Fed says, okay, let's blow off the top of this steam and then rebuild. They could right now stop printing, stop a whole bunch of the manipulation, and you would see of the velocity of the unwind would just accelerate, and there would be a race for US dollars, because people would want to get something that they could spend in their hands as fast as possible. So a US dollar would go through the roof and all other currencies would fall. I suspect that they're not going to, but that could happen. If I wanted to play the game for longer, I could do that. And I'd blow off the top of the steam, real estate prices collapse, a whole bunch of people are wiped out and everything else. And then I come in and I save the banks. And I restart it again. That would look something like 2008. But at 2008, at a way bigger number, because that's what happened in 2008. Yeah. People realized, so at my company in 2008, we'd fully funded LCs on one side of the ocean that the counterparty on the other side of the ocean wouldn't accept. The banks stopped accepting money because they couldn't trust each other's banks. And so for 3 days, just stuff locked up. And we felt it in the business that 1 minute we're doing $10 million a month, and the next day we're doing $5 million a month on a run rate. It just, and that's, so TARP came on the top of that, and it put liquidity back in the system so people could trust it, but it didn't fix the structure of the system. It just glossed it over and made it worse. So remember, that was $250 billion and then another $250 billion, and people were outraged. Free market, bail out the billionaires, bail out the banks and everything else. And it was totally against the free market. But if you let it unwind, it would have kept unwinding at that time. So that's what they did. Now we're talking $250 billion. Like, we're talking about trillions and trillions and trillions. In years, we'll be talking about tens of trillions.
Yeah. I mean, same sort of thing when the sort of pandemic sell-off happened, right? I mean, everybody says, well, hey, the Fed can't buy corporate credit. That's against their regulations. Okay, let's change the rules here and find a way. And here we go. Voila.
Yeah, they have to. And so not only that, what happens is the central banks lose independence, and government becomes the central bank, is really right. So because in central bank today the last bastion has been the banking sector that's benefited the most from this exchange. I can take off bad assets off my balance sheet, exchange them to the Fed, the new liquidity to be able to do. So I can never go broke. I can never make a bad loan. I can never make, and so that transmission mechanism, and then they rely on the banks to be able to fund to society. But what if there's no market for banks to be able to lend against? What if there's no economic engine, or not a big enough economic engine for banks to lend against? Then you have M1 exploding and M2 velocity of money going straight down, which is what you see right now. Mm-hmm. In that environment, you have to drive fiscal programs. You have to get that money that you're creating, new money that you're creating, into the market to try to drive it, and to really create inflation. And because if people can't demand higher wages, more and more higher wages, inflation doesn't hold. Right. So over time, what you're having is technology driving the other way, and then you're trying to drive this inflation, and it means government has to get more involved to be able to helicopter money and all of this type of stuff to be able to get that money into society. But the question that you have to ask yourself in this calculation is that providing really great businesses, or is it mostly going into misallocated capital? And so most of this is going into misallocated capital, and you're spending more and more on misallocated. It's not a system that has any stability. If you remove the stimulus, you see what was there all along.
Well, yeah, I mean, I think that's what you see in Canada, right? There's hardly any innovation. I think if you look at innovation and productivity, I mean, for most, I think for a lot of people, they've said, "Oh, hold on a minute, I can get rich here buying a couple of pre-sale condos. Why would I start a business?"
Yeah.
And the banks don't give business loans. Banks give loans for new mortgages.
And when you think about this, so you just keep on driving instability into the system. So when I said Ponzi scheme, could it go on for a long time more, loading up on debt and everything else? But if you're on the wrong side of that trade at the wrong time, look out. Right?
Right.
It's brutal. But now, if you play that forward, if governments can get inflation way up, and they can at some sort of magnitude of money, but way up and consistently way up, how do they stop it once it's created? How do they put it
I mean, I
back
guess
in?
you try to do something like Paul Volcker and just start raising interest rates.
So that's why I asked, because you know about Paul Volcker. The government wasn't indebted at that time; it was the private market.
Right.
And so now, if you raise interest rates on the government debt, you can't pay back the government debt, and governments go broke. So there's no way to like, the day of reckoning is coming. I don't know when. I don't know how long it can keep going, but there is no way out, because interest rates can't go up without the entire thing imploding, and it's just going to implode from a higher multiple.
Right. Yeah, that's basically the essence, is that they can't raise interest rates, so asset prices just keep going up. Then you end up creating a more disgruntled society. And I think that, yeah, again, I think it ultimately comes back to Bitcoin full circle, is that there's no counterparty risk. Well, the one thing that I find interesting is that the people that seem like the most bullish or optimistic on Bitcoin seems to be the millennials. I think number one because they grew up with technology and they sort of understand a little bit more. But I think number two is they've also been the segment of society that hasn't benefited from this easy monetary policy. Like, I can't think of, I mean, all the millennials that I know here in Vancouver, like, I think most of them realize that owning a house is a pipe dream. Maybe it's a condo out in the suburbs. And so I think they kind of realize, well, my life raft, maybe I'll hopefully get rich off Bitcoin. And it seems to be like the older traditional people in finance that maybe don't have technology degrees or that have benefited from the existing system are kind of like, well, that's a Ponzi scheme and it's going to go to zero. And so, yeah, obviously I think you come from the technology side, so you tend to be pro Bitcoin. I don't know if you have any thoughts. I mean, my only concern is, obviously I'm bullish. I'm wearing a Bitcoin shirt to the moon here, but my only key concern, I guess, would be that governments do have to come in and say, hold on, this thing's getting too big and we need to put a stop to it. And maybe the combination of central bank digital currencies coming in, that they look at Bitcoin as a threat. And I know you've talked about this before, to me privately, but I don't know if you can explain your view on that to the listeners here.
Yeah, and I wrote people could find it on Medium, but I wrote a piece called "The Greatest Game," which lays out kind of the next steps, which I believe to be the next steps, why Bitcoin and everything else, and the next steps from existing policy to be able to stop it. So I expect central bank digital currencies. I expect that because control of currency is an important thing. It gives governments control, but if you play that game out, you realize if you're playing that game, it's all control. There is no free market. That's actually the worst thing. And actually, you're funding states that social rights and everything else, or basic human rights, don't really exist. And eventually, that happens here too. At some point, like that, controlling a system to the degree you have to manipulate currency. Look in the rest of the world. And so if the US is doing it, Canada is doing it, Euro is doing it, and everybody else, I think China's doing the same game. Right.
Yeah.
And if everybody's trusted, now let's imagine I'm on a digital currency that the state owns. I'm completely tracked. If I have wealth and they want to take that wealth, I could get a negative 50% interest rate tomorrow. I'm completely trapped, and I have no way out of the system. Once I'm in that system, there's no escaping it. look at Hong Kong today. China takes over Hong Kong, currency controls, try to get your money out. If you want to be in a system where you completely rely on the state and they can change the rules at any time, that always ends badly for citizens. And Bitcoin is something that is neutral, that is that can't allow that to happen. So now, so will governments try to ban it? Yes, some governments will try to ban it. Every time a government tries to ban it, it moves faster, because what it's signaling is how important it is for you to own it.
Yeah.
Right? It's screaming at you. If you're worried about government trying to ban Bitcoin, you should be the first person to buying Bitcoin. It's screaming at you. There's a reason they want to ban Bitcoin.
Right. If it was an irrelevant asset that was going to go to zero, why would you bother banning it?
Exactly. It's
Right.
not. It's important, and it's too big already, and it's too big a network for governments to ban it. In fact, there's going to be governments that are gonna get on it earlier and win a huge part of the gain because of it, and it'll push prices higher. I will say this: if Canada tried to ban it, I would move. That's
I think
and that's what you're going to find, because when people have their individual sovereignty, they'll look for jurisdictions that are the best for them. I'm not talking about tax rates. I'm not talking about anything else, but I'm talking about outright bans. There are other choices in the world. If I wanted a golden visa for my family in Portugal right now, I invest $250,000 in Portugal, and I have a visa for my unlimited visa for my family forever. And so there's lots of places in the world to go. But it's not a bad example. It's a really good example, but I don't love talking about it. But if you look in Germany in the 30s, the people that got wealthy held the assets for the very same reason, as they were hyperinflating and everything else. And out of that rise was the rise of Hitler. And what ends up happening is you go after the people that have the assets. When all your wealth is denominated in one currency, how do you leave? You leave as a refugee.
right.
And so and you see that country after country after country that experience inflation and crushing inflation. How do you get out? And that's what and so if you have all your wealth in one currency, that's what you're subject to. You're and the citizens are subject to that mess on the way through. We forget, because we measure our time with a recency bias, instead of looking over long time frames. We forget that living in a stable currency regime is not something most of the world has access to. Right. So there's 14% of the world, 20% of the world that has lived in the last, call it 50 years in a stable currency regime. If you look past that this happens all the time, and it happens in other regions all the time. So look at what happens in other regions as currencies break down, and you can see what will happen here too.
Totally. Yeah, no, I want to get towards wrapping up because I want to be respectful of your time. But can you briefly touch on sort of, I mean, again, you're front and center in this space. So can you briefly touch on sort of the wall of money that's coming into this asset class?
Um, so yeah, a lot of, I can't name names and everything else of different people that I'm talking to, but you can imagine, there, it's really rare right now to find somebody who is not interested in learning more about this asset class. Some of them come to a conclusion that they don't want it. They see too much risk, but very, very rare to find people who aren't investigating it, at least putting some allocation. And if you think about 21 million coins divided by 400 trillion, It doesn't take very much to move the needle a lot. So that allocation, as that speeds up, right? I suspect price is going to go through to your shirt to the moon.
Yeah, for sure. So how can Canadians, obviously try to focus on being a Canadian show here, but any simple recommendations for Canadians? I mean, maybe starting with like a percentage of their capital that should be allocated into, and what is the easiest or best way for Canadians to get exposure to Bitcoin, in your opinion?
So that's a
Not financial advice, obviously.
yeah. So I don't want to actually say somebody's allocation either,
Okay.
because that depends on their own risk reward tolerances, how much of research that they've done on it, what it means if it failed versus the other system failing. This is a complex topic, but what I would say is that so that people could get a reference point. If you had a Bitcoin, only 21 million people, and less than that because some Bitcoin have been stolen. So only 21 million people in the world could have that or more. And think about how many millionaires are in the world and how many billionaires are in the world, and realize what that could do for you if it continues that success. You wouldn't need a lot to to change everything. It's actually the same economic calculation that as a lifeboat alone, I can't imagine somebody not doing, even if they assigned a probability, even if they signed, which I would assign a way lower probability of Bitcoin going to zero. I would assign a very low probability to that event. Excruciatingly small. But even if they assigned a 50% probability to that, what if they're wrong? What if monetary system like we're talking about, they can't afford not to be in it, because that means the existing entire wealth is destroyed. So I don't like to say what any certain person should do, because it depends on their own risk. But I'd like to talk about what it means in the kind of the macro space. Best spots for small amounts. ShakePay is a pretty good solution in Canada.
Yeah.
For larger amounts, over the desk trading, Sat Street is a really good solution. And then those are exchanges, and then you'd want to take it off an exchange, put it in Ledger or Trezor or hard wallet, so that people could look that up. But again,
you got one of those right here.
Yeah, we won't be able to do a deep enough dive on this type of show, but there's lots of BTC sessions in Canada, really great content for Bitcoin, for people to understand all sorts of sides of Bitcoin.
Yeah, no, for sure. And I personally just use ShakePay. I know had a good conversation with the founder there, Jean.
Yep.
And good company. I think they're in Montreal there. So
they are.
Super simple. I think you just simply e-transfer, and it's so yeah, no, I appreciate everything, Jeff. I think it's been like a wealth of information. I think we could probably go on for a couple hours here, but yeah, I want to be respectful of your time, and I'm sure hopefully at some point we'll have you back on, because I know there's going to be a lot of comments, a lot of questions, but this has been fantastic.
Awesome. Thanks, Steve.
Thanks, Jeff.